I think that very much so. This uneven recovery is a pretty fundamental point, not only for economists, but also for when it comes to the global markets. I think that what it means is that if you look around the world, you really only have three or four economies that are vaccinating at a fast enough pace to give us hope of reaching herd immunity by the end of the year. The rest of the world is very far behind, and it's a 2022 story or even beyond. So what that means is that you really don't have that visibility in terms of growth, not only economic growth, but earnings growth. And it's happening at the same time where you have policy divergence that's exacerbating some pressure, especially for parts of emerging markets. So you're going to lose that policy support at the same time when you don't have that growth necessarily coming through. So I think that that's very much, a reason why we're quite selective at this point when it comes to investing. We want to stick with economies that have that growth visibility, that has that policy space, and there are not too many at this point. So we're sticking with the U.S. and China. In emerging market, we like Asia over the rest of EM for now.
Now, what do you like in China right now? I mean, increasingly there's been regulation. There's one risk. There's also a lot of uncertainty about what's going to happen with US-China relations. There's all these issues that are overhanging the market right now.
Mm-hmm. I think that the China recovery is, first of all, is quite strong. I think there are multiple drivers for it. We've seen that export industrial sector really driving growth so far, and that's reflected in a lot of the upgrades that we've seen over the last couple of weeks. I think what we are watching is domestic demand recovery. That's more gradual, that's expected. But if we see continued labor market healing, if we see continued income growth, both of them will support the consumption recovery second half of the year. That's quite important in getting us to that 6%, around 6% GDP growth, so the economy kind of soft lands into a reasonable trend growth by the end of the year. That would be, I think, quite an achievement. We're not necessarily so worried about policy tightening. I think there's a lot of talk about removing some credit impulse support here and there. But I think it's a little underappreciated that policymakers can also be quite flexible. So, with so much already having been done in terms of policy normalization, they can actually end up tightening a little bit less or ending a little bit earlier, if depending on how the growth, how the economic numbers stack up by the year end. So I think that flexibility is very much an option for China as well.